The IPO of Warburg Pincus-backed Computer Age Management Services, or CAMS, has opened for subscription today. Well, CAMS is a technology-driven financial infrastructure and services provider to mutual funds and to other financial institutions. Let's do a three-point analysis to really find out if investors should subscribe to it. 1. What are the public issue details? Well, the price band has been fixed at 1229 to 1230 rupees. Now, the company is expected to raise about 2241 crore rupees at the higher end of the price band. The entire quantum of shares being sold to investors in CAMS IPO is actually an offer for sale of NSE's 37.5% holding or 1.82 crore shares. So, NSE is fully divesting its stake in the company through this IPO. Now, the promoter, Great Terrain, which is an affiliate of PE firm Warburg Pincus, will actually continue to hold 43.5% stake in the company and post issue along with the marquee shareholders like HDFC Bank, HDFC Limited. Now, the company will not receive any proceeds from the offer, and all such proceeds will actually go to the selling shareholder. Now, the issue closes on September 23rd, and investors have to apply for a minimum of, say, 12 shares and in multiples thereof. So, minimum application for retail at upper price band for one lot is 14,760 rupees. Now, ahead of the IPO, CAMS also raised about 660 crores from 35 anchor investors. 2. Why invest in proxy play rather than AMC stocks? Well, that is because investing in AMC stocks exposes the investors to risks like AMC assets may actually decline when the industry AUM is actually growing, while CAMS is a relatively stable play on the overall growth of the mutual fund industry. Now, it is India's largest registrar and transfer agent of mutual funds, and that's with an aggregate market share of around 70% based on the mutual fund AUM managed. Now, mutual funds is the key segment for the company and accounts about 85 to 90% of its revenues. Around 80% of the revenue from mutual funds is actually based on the fee that is charged as a proportion of the mutual fund AUM. Now, CAMS also services 4 out of the 5 largest mutual funds and 9 of the 15 largest mutual funds in the country. Now, these are very less risks to the existing market share. Now, also CAMS has entered into another business lines to diversify its revenue, say insurance service businesses, electronic payment collection services business, also alternative investment fund or AIF services business, etc. So the balance sheet is also right now quite lean with zero debt, negative working capital, resulting in healthy return ratios as well. Now, it has been consistently generating strong free cash flow over the last 4 years. 3. Should you subscribe then? Well, IPO comes at a time when the investors' interest in primary market offerings is at a high point, implying that huge appetite is there for the issue and consequent listing gains also are there. Now, at the higher end of the price band, the issue is valued at 35 times FY20 earnings, given the unique business modes, also annuity-like revenues in a growing industry, and valuation also looks quite reasonable right now. Now, given the sectoral tailwinds and CAMS vantage positioning, we do expect the stock to be a long-term compounder as well. So, being a quality franchise, we do see a strong demand for the shares for the company as well. Hence, most of the analysts are recommending currently investors should subscribe to the IPO for listing as well as for the long-term gains.